Big update for millions of pensioners starting May 10th. A higher pension credit change is officially confirmed, and it could directly impact your monthly income more than you think. Stay with this video till the end, because we're breaking down exactly who benefits, how much you could receive, and what steps you must take right now before it's too late. And if you're in the United States and want simple, clear updates like this every time something important drops, make sure to hit that subscribe button. This channel focuses on US pension and financial updates, so you never miss money you may be entitled to. Hello and welcome back to the channel. If you're a pensioner in the UK or you know someone who is, then you absolutely need to pay attention to what I'm about to share with you today, because this could make a massive difference to your financial situation. We're talking about some significant changes coming to pension credit that have just been confirmed, and they're happening from May 10th. Now, I know that pension credit might not sound like the most exciting topic in the world, but trust me when I say that understanding these changes could literally put hundreds or even thousands of pounds back in your pocket every single year. So please stick with me throughout this video, because by the end, you'll know exactly what's happening, who's affected, and most importantly, what you need to do right now to make sure you're not missing out. Let me start by painting a picture of just how important this announcement really is. Right now, across the United Kingdom, there are millions of pensioners who are entitled to pension credit but aren't claiming it. That's not an exaggeration. The government's own figures show that around 800,000 pensioners who qualify for this support simply aren't receiving it. That means hundreds of thousands of older people are struggling financially when they don't have to. They're choosing between heating and eating, cutting back on essentials, and living in genuine hardship, all while being entitled to money that could transform their daily lives. It's an absolute tragedy, and it's one of the reasons why these new changes are so incredibly important. So what exactly is pension credit? Well, in simple terms, it's a benefit designed to provide additional financial support to people who've reached state pension age and are on a low income. It's there to top up your weekly income to a guaranteed minimum level, and it comes in two parts. The first part is called guarantee credit, which tops up your income if it's below a certain threshold. The second part is called savings credit, which is available to people who reached state pension age before April 2016 and who have saved some money for their retirement. Now, here's the thing that catches so many people out. Pension credit isn't just about giving you a bit of extra cash each week, although that in itself is incredibly valuable. When you qualify for pension credit, it also acts as a gateway to a whole range of other benefits and support that can make an enormous difference to your quality of life. When you're receiving pension credit, you automatically become entitled to help with housing costs if you rent your home. You get council tax reduction, which in many cases means you won't pay council tax at all. You'll receive help with NHS dental treatment, glasses, and travel costs for hospital appointments. You'll get the Warm Home Discount Scheme, which gives you a payment to help with energy bills during winter. And this is absolutely crucial. You'll be entitled to pension credit winter fuel payments and cost of living payments that the government announces from time to time. Missing out on pension credit doesn't just mean losing that weekly top-up. It means missing out on all of these additional forms of support, which is why it's so vital that anyone who might be entitled claims what they're owed. Now let's talk about what's actually changing from May 10th and why the government has made this announcement with such fanfare. The key change is that the government is significantly increasing the amount of money that pensioners will receive through pension credit. For a single person, the guarantee credit element is going up, and for couples, the increase is even more substantial. What this means in practical terms is that if you're already receiving pension credit, you're going to see more money coming into your account each week. And if you weren't quite eligible before because your income was just slightly too high, these changes might now bring you within the eligibility threshold, meaning you could qualify when you didn't before. The exact figures are absolutely worth knowing. From May 10th, a single person will see their guarantee credit level rise to a weekly amount that ensures they have a minimum income that's genuinely livable. For couples, the combined minimum income guarantee is going up proportionally. These aren't tiny increases we're talking about. Over the course of a year, this could mean several £100s extra for those already claiming. And for new claimants, it could mean gaining access to support worth thousands when you factor in all the additional benefits that come with pension credit eligibility. The government has confirmed these figures, and they're tied to the latest inflation data and cost of living calculations, which means they reflect the reality of how expensive life has become for older people in today's Britain. What's particularly interesting about this announcement is the timing. May 10th isn't a random date. It's been specifically chosen to coincide with the new financial year adjustments and to ensure that pensioners receive this boost at a time when many are still recovering from the expensive winter months. Energy bills have been astronomical, food prices remain stubbornly high, and many pensioners have been dipping into whatever savings they have just to get by. This increase is meant to provide some relief and to acknowledge that the current cost of living crisis hasn't gone away. It's still hitting older people on fixed incomes particularly hard. But here's where things get really important, and I need you to pay close attention, because this is where millions of pensioners could either benefit enormously or miss out entirely. These changes are not automatic for everyone. If you're already claiming pension credit, then yes, your payments will increase automatically from May 10th. You don't need to do anything special. The Department for Work and Pensions will adjust your payments, and you'll see the increase reflected in your account. However, if you're not currently claiming pension credit, even if you're entitled to it, you won't receive a penny unless you actually make a claim. The government isn't going to knock on your door and hand you the money. You have to take action. This is where the real tragedy lies. There are hundreds of thousands of pensioners out there right now who have no idea they're entitled to pension credit. Some assume that because they have a small private pension or a bit of savings, they won't qualify. Others think the process is too complicated or that it's not worth the hassle. Some feel embarrassed about claiming benefits or believe that benefits should only go to people who are worse off than they are. And some simply have no idea that pension credit even exists because nobody has ever told them about it. Every single one of these reasons is understandable, but every single one of them is also keeping pensioners in poverty when they don't need to be. Let me be absolutely clear about something. Claiming pension credit is not charity. It's not a handout. It's not something you should feel embarrassed about. This is money that you are legally entitled to. You've worked hard throughout your life, you've paid your taxes, you've contributed to society, and this is a system that's been designed specifically to support you in your retirement. There is absolutely no shame in claiming what is rightfully yours. In fact, by not claiming, you're actually making things harder not just for yourself, but potentially for your family members who worry about you and might end up having to provide financial support that wouldn't be necessary if you were receiving the benefits you're entitled to. So how do you know if you might be entitled to pension credit? Well, the eligibility criteria are actually more generous than many people realize. First of all, you need to have reached state pension age. That's currently 66 for both men and women, though it's gradually increasing. If you or your partner haven't reached state pension age yet, you might need to claim universal credit instead, but that's a topic for another video. Assuming you've reached the right age, the next question is about your income. Generally speaking, if you're a single person and your weekly income is below the guarantee credit threshold, you should be eligible. For couples, there's a higher threshold because obviously you're assessed as a household unit. Now here's the part that trips people up. When we talk about income, we're not just talking about your state pension. We're talking about all your income, including any private pensions you might have, any earnings if you're still doing a bit of part-time work, and most other regular income. However, and this is crucial, not everything counts. Certain disability benefits don't count as income for pension credit purposes. The first £10 of earnings each week is ignored. And importantly, your savings are treated in a specific way that's actually quite generous. If you have savings under £10,000, they're completely ignored. If you have savings above £10,000, every £500 above that level is treated as giving you an income of £1 per week. This means that even if you have £20,000 in savings, it's only treated as giving you £20 a week in income, which might still leave you eligible for pension credit depending on your other income sources. This is why it's so important not to assume you won't qualify just because you have a bit of money saved up. The rules are designed to encourage people to save for retirement while still providing support to those who need it. You could have a modest private pension, a small amount of savings, and still be entitled to pension credit that would significantly boost your weekly income and unlock all those additional benefits I mentioned earlier. The only way to know for sure is to actually check your eligibility and make a claim. Making a claim for pension credit is easier than you might think. You can do it online through the government's website, you can do it by phone by calling the pension credit claim line, or you can download and print a claim form if you prefer to do things on paper. The process involves providing information about your income, savings, and living situation. It might seem like a lot of questions, but every single one of them is there for a reason, to make sure you get exactly the right amount of support. If you find the process overwhelming, there's plenty of help available. Organizations like Age UK, Citizens Advice, and local pensioner advocacy groups have trained advisors who can help you complete your claim absolutely free of charge. They can sit down with you, go through all the questions, help you gather the right documents, and make sure your claim is submitted correctly. One thing I cannot stress enough is that you should claim as soon as possible. Pension credit can only be backdated for 3 months, which means if you're entitled to it but you wait 6 months to claim, you'll lose out on 3 months' worth of payments. Given that we're talking about potentially hundreds of pounds, that's a significant amount of money to leave on the table. With these new increased rates coming in from May 10th, now is absolutely the perfect time to make a claim. If you claim now and you're found to be eligible, you'll start receiving the increased rate once it comes into effect. You won't miss out on that boost. Let me address another common concern that stops people from claiming. Some pensioners worry that claiming pension credit will somehow affect their entitlement to other benefits or cause problems with their existing arrangements. The reality is quite the opposite. Pension credit is specifically designed to work alongside your state pension and other entitlements. It doesn't reduce your state pension. It doesn't affect your personal independence payment if you receive that. It's an additional layer of support that fits around your existing income. And as I mentioned before, it actually opens doors to other forms of help that you might not currently be receiving. There's also the question of what happens if your circumstances change after you start receiving pension credit. Life isn't static, especially in retirement. You might receive an inheritance, you might decide to take on a bit of part-time work, your rent might increase, or you might move house. All of these changes can affect your pension credit entitlement, and it's important to report them to the Department for Work and Pensions when they happen. But don't let this put you off claiming in the first place. The system is designed to be flexible and to adjust to your changing circumstances. If your income goes up and you're no longer entitled to pension credit, fine, that means you're in a better financial position anyway. But if you never claim in the first place, you're definitely missing out right now when you need the support. I want to take a moment to talk directly to those of you watching this video who aren't pensioners yourselves, but who have parents, grandparents, elderly neighbors, or friends who might benefit from this information. You have an absolutely vital role to play here. Many older people don't watch YouTube, they're not on social media, they don't read news websites, and they might not even watch much television news. They could be completely unaware of these changes and of their entitlement to pension credit. If you think someone you know might benefit, please have a conversation with them. I know it can feel awkward to talk about money, especially with older relatives who might be proud or private about their financial situation. But approaching it from a place of genuine care and concern can make all the difference. You could frame it as you've been learning about pension credit and wondering if it might be something worth looking into together. Offer to help them check their eligibility or to sit with them while they make a call to the claim line. That simple act of support could transform their financial security. Looking at the bigger picture, these pension credit increases from May 10th are part of a broader recognition that the current cost of living is unsustainable for people on fixed incomes. Pensioners have been hit particularly hard by recent inflation because so much of their spending goes on essentials like food, heating, and housing, all of which have seen massive price increases. Unlike working-age people, most pensioners can't increase their hours, take on a second job, or negotiate a pay rise. Their income is largely fixed, and when prices go up, they simply have to manage with less. Pension credit increases are a way of ensuring that the most vulnerable pensioners aren't left behind and that everyone has access to at least a minimum standard of living. It's worth noting that these changes have been welcomed by virtually every pensioner advocacy organization in the country. Age UK has called it a positive step but has emphasized that more needs to be done to increase the take-up of pension credit among those who are entitled. The charity estimates that pension credit worth over £1.7 billion goes unclaimed every single year. That's an astonishing figure. It represents real money that could be making a real difference to real people's lives, but instead is sitting unclaimed because people either don't know about it or don't think they'll qualify.